Episode 4, Greenland. In why Greenland can move markets, the headlines we're seeing in the news today. In the next few minutes, I'll show you exactly where Greenland plugs into the same chain reaction that we've been discussing throughout this series, and what it can mean for prices, currencies, and ultimately your portfolio, which is what this is all about. Greenland is a different trigger, but it hits the same chain reaction through shipping routes, however you want to pronounce it, and security risk. When shipping risks rise, things get more expensive, and that can feed into inflation, rates, and ultimately markets, So episode 1 gave us the map: trade, energy, inflation, rates, markets, your wallet. Episode 2 was Venezuela, oil supply expectations, feeding inflation and rate expectations. Episode 3 was the tariff domino, policy adding costs that show up in prices. But Greenland's different. However, it does hit the same system. If tariffs are a cost added by policy, Greenland is about costs added by shipping and security risk. And those costs still flow into inflation rates and market volatility. So why is Greenland suddenly back in the news? Because it's strategic territory in the North Atlantic and the Arctic. The US already operates a major installation there. It's called the Pitafik Space Base, if my memory serves me right. Sorry, I've not got this scripted, which is tied to missile warning, missile defense, and space operations. So strategically, it's really important. And politically, this has escalated. And we've seen this with US pressure and also very clear pushback from Greenland and also from Denmark, with Greenland's Prime Minister saying Greenland chooses Denmark over the US, and US officials arguing that the US needs Greenland for strategic reasons, and that the issue is creating serious friction with European allies. So that's kind of a summary of what's happening. Markets, on the other hand, care less about drama and more about what it implies. Alliance tension and security uncertainty is in a strategically sensitive region. It's not good, right? And we're seeing that playing out in the news daily when you're, whatever news channel you're reading, I'm sure you've come across it. Why should investors care about shipping routes? Well, as Arctic ice conditions change, routes around Greenland and across the Arctic become more usable for parts of the year. Shorter routes can mean lower fuel costs and differing shipping economics, but also more strategic competition. I think it was a CBS article I read recently broke down how the warming conditions are opening up new routes around Greenland, which is one of the main reasons it's drawing so much attention. Here's the market point. Shipping is a cost input into everything. Really, literally. If trade routes become more contested or more uncertain, even temporarily, markets can price in supply chain risk. That's not just a company story, it can become a global inflationary story. You don't need to overthink it. trade routes are basically global plumbing. If the plumbing looks unstable, markets get jumpy. Hopefully that's an okay analogy. The other area is critical resources and, the kind of minerals narrative that we're hearing. So Greenland is regularly discussed in the context of rare earths and other strategic minerals. CSIS recently highlighted that Greenland has globally significant rare earth potential, but development is slowed by infrastructure and also by harsh conditions. So yes, it is rich in resources. However, that doesn't mean getting access to those resources is simple. The Atlantic Council made a similar point. Resources exist, but projects face big practical obstacles. And again, that's infrastructure, climate, and what we're seeing now, local politics. This isn't theoretical. I mean, Denmark's state investment fund has a huge appetite to invest in Greenland, including in critical minerals and energy-related projects in 2026. So, I mean, I guess just not to keep repeating myself, but the drawbacks have been the ease of taking advantage of that. So why should investors care about this? Well, there's two main reasons. Long-term supply chains is one, and narrative shifts. When critical minerals becomes policy priority, capital and headlines are going to follow. An important nuance to that is minerals don't change markets overnight. It's not just something that happens like that. But the political and strategic competition around them can change risk sentiment really quickly. So that's something to be aware of and also to pay attention to. So, and that just kind of brings me on to how it hits, your portfolio, and make it as simple and as practical as I can. And it basically comes down to three main areas, and that would be, one would be like a risk premium and volatility. When geopolitics heats up, markets can go risk off. That often means more volatility in equities and also in credit. Two would be FX moves. And as I've mentioned, that can go one of two ways. It can benefit you or it can impact you very drastically. And then thirdly, you would have sector effects. Defense, shipping, logistics, and some resource narratives can get attention, while rate-sensitive growth assets can wobble if risk sentiment shifts. No major panic required. You just know what you're exposed to. That's the kind of main thing. And just try not to kind of like doom scroll, in my humble opinion. I'm guilty of it too. So I guess if I was to give three indicators, indicator one would be follow diplomatic escalation signals. Actual actions though, not threats. Look at official statements and kind of like NATO level like responses. Indicator two would be shipping supply chain stress. You don't need to be studying charts all day. Just watch whether shipping disruption is being reported consistently. Not just as like a one-off. And third would be project and investment announcements. I think that's a really big one. Real investment comments matter more than hype. It's all fair and well saying, we're gonna, invest this and that, and it can just be to curry favour politically or for whatever reason. Denmark's investment push is a good example of actual tangible moves, in my humble opinion. And yeah, they would be the three indicators. So Greenland matters through three lenses: security, risk, shipping routes, and critical resources. And the market impact is usually through risk sentiment, FX, and volatility. In episode 5, I'm going to cover the scenario that can hit markets fastest. So that's one to really look out for. And that would be, what if countries started dumping US Treasury bills? So that's a pretty interesting topic. Will it happen? I don't know. It's like that's really hard to predict. So if you found this interesting, feel free to drop a comment in the comments box, hit the follow, hit the subscribe, hit the share button. Expat Money Chat, if you have any questions, drop us an email at info@expatmoneychat. Really, as always, appreciate you taking the time to watch. Thank you.